Right. Good afternoon. This is today's 20th November 2022. Sunday from this end. I just want to share with us my thoughts on this 601S. As you can see, we'll go straight to the components we use for getting a good trade setup. I hope you can hear me. All right, so let's get to look at what the components is, just to refresh our memory. We have the first one we look at was the structure of the market, what's happening, what's going on, and then we also look at the range in which we are trading. After that, we look at the high time frame point of interest, or the institutional candle that resulted to the manipulation of the highs or lows in the market as regards to the trend we are trading. Then we'll look at imbalance. Why is imbalance necessary? There must be, or rather there should be an insufficient price action because of the speed with which price moves away from where it was, resulting to the break of structure. Then we look for liquidity, because we know, as I've said before now, internal liquidity needs to be captured before entry, and then we target external liquidity for profits or take profit or targets. Or make use of the fib levels for extra confirmation. So having this in mind, I think I want to bring this here. Let's see what entry we can get from here. Remember, this Forex perfect entry, we want to find out the entries we can get from 101S. Okay, I think I need to break this down, make it very close. I want it to go, so I'll be taking them step by step. First, let's look at structure. Structurally, 101S is bearish. What it means is that you can see what price is doing. Price has been giving us this, and then it broke above this. So that's already a break of structure. So we're going to now start looking at, since market has broken structure, what do we do? Where can we get our entry? Okay, let me pick this place. Let's look for entries now, or what we can see. So let me show you what we can look out to get from here. Right, let me remove this. So widen this so that you can see. As market was trending, first market broke this. Market broke this for me. Broke this for me. Market broke this for me. That was a shift. Broke this for me. And market came here and broke this. But before market broke this, I think I'm seeing something here that happened. Let's have this. First, there was an imbalance created here, which price came into. You can see that there was also another imbalance here. I was expecting price to come higher, so the price didn't come this way. But this is another imbalance here. I was expecting price to come into, which price never did, but rather respected this place. All right, let's go to lower time frame and see the place would have been able to get from this. All the plays that we have here, let's see how many plays would have been able to get. Okay. All right. Market came and gave us this. Market gave us this. Then there was an imbalance here. Market came back to it. When market broke away, there's an imbalance here. Market came into it. That was play number one, but I was expecting market to come higher. I was expecting market to come back to this place. Market never did. So just touch this imbalance and rather than creating an institutional candle to this place. So let's see what I'm able to play this. We had this high, we had this low, we had this high, we had this low. Market came back into this candle. Market came back into this one, this candle. It gave us this move down. All right, we didn't see that, but that would have been a nice play. Market gave us all this move all this way, and came, gave us this. As market gave us this, the next play would have been here. Let me remove all this so that okay. Market gave us this was the last move. Market somehow came back into it, not once, not twice. First play, when market moved away, let me see if I can increase this so that you see it clearly. It's left with an imbalance here. Left with an imbalance here. First, market came back into the imbalance. This was the imbalance. Market came back to it and gave us this push. Came to this place, created a double bottom. Ton of liquidity around this place that was created. And since market couldn't move down, came back into this whole move. Came back, cleared this as liquidity, and then we had this, came back all the way to this place. So let's say there's no way we would have been able to catch this because we already had this, then created a lot of liquidity at this level. We saw liquidity resting in this place. Market came, cleared it, and boom, it went downward. Okay. So when market from here, market broke. This was where market broke. So the next place market came, there was a cube here, market came into this cube around it. You can see there was an imbalance here also created. So this would have been the next entry for at least this other entry. Market has been going down since then. You can see market cleared this low. Because from here you can just keep adding position one, but market cleared this low. So the next anticipation for me is that price may want to come back here. Price may want to come back here. Price may want to just come back here. Touch on this. Let's go to a lower time frame. Let's see what, because there's another imbalance I'm spotting around here now. These are just the plays that have already been missed. So it's just to show you what the market has been doing. Market always return back to this whole move up before this break. Move up before this break. Let's go to a lower time frame. Let's say 15. Let's see. We'll go back to the higher time frame. Let's continue the structure. But I'm just showing you structurally what the market kept doing. Okay. All right. It's better here. Market clearly. So there is an imbalance here. It exists here continuously. So price might just come back here into the imbalance and keep going down. Price might decide to go. I decide to come here. Decide to come here. And then to go down. Okay, so price might decide to come here, but that's not my point of interest. Now, I want to see, let me go back to daily, and then let's consider structurally what the market portends for us. Now we know by structure is bearish, but market has given us a break of structure in this point. This is already a break of structure. It's a break of structure at this level. You can see that it's very clear. So since market has given us a break of structure, the next thing to do is to begin to look for that candle where the price is definitely going to come back into. So what I can see here, I can see there's an imbalance here. There's an imbalance here. So structurally, there's an imbalance here. Now also remember, bear in mind that this is the whole move down that resulted in the break of structure. This is the whole move down. This is the move that brought about the break of structure. This is the move, the entire place. So we're going to be expecting price to return here and give us a distribution or an evidence. Then we move up. So let me just remove this. This is just okay. So price should come in here, give us that distribution, and then we go up. Since there's a break of structure here, so structurally there's a break of structure. Market is already turning bullish. So this is the institutional candle or the hard time frame point of interest. We're expecting price to come into. I think I'll just call this mitigation candle, whichever one. Mitigation candle. This. So we expect price to come here and give us a distribution, a redistribution or a reaccumulation, and then we move from here. Now there is a cube in this place. There's a cube that is aligning with this. Let's go to lower time frame so that you see the cube. Let's go to H4. Let's see if we can spot that cube. But everything is going to align within this box. Then we're going to use our feet for extra confirmation. Okay. See now, it's clear. So this is all right, let's take this. This is internal liquidity that we anticipate should be cleared. Internal liquidity. Anticipate that this should be cleared. There's tons of money resting in that place. Tons of money resting in that place. Okay. This is where the imbalance is on H4. So all this area is the institutional candle. All this area is the mitigation candle, is the institutional candle, or the mitigation candle. All right, let me write this is IPA or imbalance, insufficient price action. So I just call it IPA so that you can just know what we are calling for. And now the imbalance is above or within the institutional candle, telling you that there was a fast move, a greater order was in this whole institutional candle that moved down, took out this liquidity, and then gave us the break of structure that rallied up. This was external liquidity cleared, and then price rallied up, broke here, broke here. This was the first break. Let me remove this. This wasn't necessary. This was the first break because this is a high, this is a low. This was broken, and the price went ahead and cleared this one too, giving us the real break of structure. So we expect price to come back into this place and redistribute, and then we can take it all the way up. Let's check 8 hours so that see what we can get. But this is what I'm looking at. These are my thoughts. For me, this is what I would like to see. I would want to see price return back into that place, and then we are seeing internal liquidity is going to be cleared here. Then here will be external liquidity. As you can see, it's obvious we have tons of liquidity resting around this place. Tons of liquidity resting around this place. Liquidity here, liquidity all the way here, and then you can take price to this place, fine, to this imbalance, that's okay. This imbalance and all this for target. So let's look at fib level. What is going to be our fib level? A fib level, sorry. Take this price is here, we'll take it from here to this place. You see that this price is at a discount zone. Taking price from here all the way down up. 786, 886, anything below the 50 level is a discount zone. So we can anticipate price to come in here, and then from here we'll get that move that will clear liquidity, give us a break, come back into it and have a retest, and then we go. Price might just get this done. So put an eye. I'm going to drop this straight in the Telegram group. If you are not in the Telegram group, please go to join, because we are going to be taking trades from there. I'm going to be dropping my thoughts there so that we can keep an eye together and then get into the market almost at the same time. So you're not in Telegram group, please. The link is right below this video. You can just click on it and then you can join Telegram. I'm going to be sending this out to this 28th, and it's around 3:36 p.m. So if you can keep an eye on this, wait for this distribution here, and then we can go all the way up together. So let me clear this so that you will have the plate set up. I'm removing the fib right now. Already you know what we are looking at. One price to come in here, give us that distribution, that evidence, the break and retest. Gives us that break. 1, 2, 3, 4. If you sweep internal liquidity, give us a break, and then we can just go. Once liquidity is swept, it will give us a break of structure. Then internal liquidity will still be cleared, and then to come back to the point of interest to retest, and then we move on. The same principle is what will still happen in this place. All right, thank you so much. You have not subscribed to this, kindly do so, as many other videos will be coming. You get our videos firsthand once we upload, so that you can catch up the trade and then we can move together. Kindly like and share this video as well, and then we'll be seeing in our next video. Peace out.